Hello everyone, welcome to another webinar. My name's Jacob Pritchard. This is brought to you by Port Jackson Securities. Today I've got here with me the Managing Director of CRO, Cirralto, Adrian Floate. Adrian, thanks for coming today. I guess, how are you and how are you feeling going towards the end of the year?
Man, I'm great. I am enjoying what we're doing at the moment, and I must say I'm looking forward to Christmas. I do like when the phone stops ringing just for a few days. Good opportunity to get a few waves and hang out with the boys, so it should be good.
100%. And what a year we've had so far. So some questions that I guess that we've got here. Now, I guess for people prospective shareholders, people that have been watching you for a little while, what is Cirralto all about? Give us a bit of just a top-down view.
What is Cirralto all about? Oh, that's a pretty broad question, mate, but I suppose we've really redefined ourselves in the last 12 months. So we started with a dream of changing the way in which buyers and sellers collaborated. And I suppose against that backdrop, historically speaking, we've been a software business that provided solutions to the buyer and the seller to allow them to make sales and transact with each other. And I suppose from there, we've added payments capability, which is really about taking the jump after you've made the sale into settling up. And then in more recent times, we've added the lending capability, which is really about sort of, I guess, blending the whole sort of core capability together between the buyer and seller, allowing the supply end to have the minimum amount of accounts receivable asset as is humanly possible, and for the buy end to get access to financial instruments and payment rails, which allow them to get the right amount of credit and utilize the software really as that weapon in the middle to control the whole tempo. So as a business, we're pretty hard to sort of compare to. And I suppose we've been really deliberate in the way we've built our capabilities and what we're bringing to the customer sort of landscape right now.
Perfect. Now, I guess someone coming into this company as a new shareholder, what's something that we should pay close attention to, I guess, investing in Cirralto moving forward?
Oh, look, I think the things that we've been talking to over a long period of time has really been all about, first of all, technology capability. What can we do for our buyer and seller, and what's the problem that we solve? And we're clearly articulating that we're not just a software company, we're not just a payments company, and we're certainly not just a lending company. We're a composite of all the above, which really differentiates us in market. So I'd certainly be interested to see, if I was a shareholder, I want to know where's the technology going, and we'll keep talking to that. And then I guess against that backdrop, it really comes down to how many customers, execution of what we call our node spoke strategy. It's very much a supply chain driven event where we look at the way buyers and sellers, if you like, congregate, and we say, well, there's fewer manufacturers than there are distributors, and fewer distributors than there are retailers, and fewer retailers than there are consumers. And so understanding that landscape, we're really trying to build capability in between each parts of that value chain and create experiences which allow them to trade more seamlessly. So I'd be looking at number of customers acquired, total payment flow managed. They're the things that really matter, and they're the things that we try and express when we announce a deal, because they're the metrics and the levers we can pull to keep moving our revenue forward.
Perfect. Now, obviously, busy last 12 months it's been, and an absolute game changer across the board. Look, we've been watching you guys closely. We've spoken a little bit as well, and we've been pretty impressed with how you guys have been able to adapt to the conditions presented. And look, I guess a good question here is, how do you feel like it's positioned itself well, CRO, for the next 12 months coming?
Oh, very much so. I mean, we sort of set about a very deliberate sort of course of action, and I suppose it's very gratifying to see how far we've come in the last 12 months, and looking at that landscape. I don't know about everyone else, but for me, sort of 20 and 21 almost blended together into a super year of strange anomalies and change. But against that backdrop, I suppose if you look at the way we've deliberately been building the enterprise, we know that there's only a few more things for us to tick off to close out 21, and we're moving into 22 with up and about with a great deal of belief and knowing where we're going. So, that's, you can't not be happy with that.
Yeah, 100%. No, that's great. I think also an exciting, an exciting announcement that's come out today. What can you provide on that?
Yeah, look, I mean, eBev's been a deal that we've worked on for a while now. You having a few audio issues? Because I know I got a bit static before. It's been a deal that we worked on for some time, and it's one of those transactions that are right at the cornerstone of what we see as being our node spoke strategy. And it's one of those deals where, it's a classic sort of starting small. So we've got a $1 million facility going in there. We know we've got payments to come shortly. That's an in-train transaction, and we expect to grow those two things out. So we're really working with eBev to help them to create as much cash flow within their own business so they can keep growing. Because obviously their success is our success, and we take that view with any organization where we're partnering. We want to provide levers to them which allow them to utilize our capital, our software, and our payments capabilities to keep their own business growing and connect them to their trading partners.
Perfect. Now, moving on to, look, obviously last 12 months in terms of share price, you guys have had a really good calendar year return. Can you attribute this to anything in particular inside the business? Is there anything that you feel worked really well over the last 12 months?
Oh, look, there's no doubt that having the balance sheet to be taken seriously has made a big difference, but probably moreover, sitting on amount of working capital where you can take really mature decisions about what you're building and why, proved being the key thing. So for us, the year's kind of unfolded, in a framework and with a pattern that was pretty well planned. Like most of the things that we've done through the journey, whether it's acquire Establishment or acquire Envigo, or in more recent times acquire Green Shoots, were all about recognizing what were our potential chinks in the armor, what could have made us vulnerable to competitive threat, and how can we plug them? And we've taken those sort of steps now. We've built what we believe is a really not just compelling offer to the customer, but also a compelling business that will allow us to sustain growth into the future. And we certainly see, old school values like profit as being important things. So we don't just want to be looked at or viewed as, a business that's in a great segment. That's probably the thing which motivates me the most is we not only have this great digital opportunity, but we have an opportunity to have so much impact on our customers. And obviously, I believe if you do a great job, you get paid. You don't worry about getting paid first. You do a great job, and that's what we're really focused on doing and aligning the team behind.
Wow, well said. That looks really good for the next. Look, obviously over our side, you guys have been the talk of the town. There's been quite a few whispers going around, so we're pretty excited to hear more, and I guess the next quarter as well. Is there anything in the last 12 months that you feel most accomplished about? Business morale, anything internally, or?
Well, look, there's been a lot of achievements. I think, as I said, if I kind of play back the last 12 months, we've come. Probably the most satisfying thing is to be getting recognised for the business that we aspire to be, and we probably set off on that journey maybe 2015, 2016, and like anything, when you're creating something from scratch, you don't get it right the first time. And we've been so I would say steadfast in our commitment to where we're going, and the last 12 months, that's actually paid dividends. We now can see where we're better than competitors. We can see what our market appeal is. And not only that, we can also see that some of the conservative assessments we've made of how things would grow were exactly that, conservative assessments. And that's allowed us to accelerate other things. So, that's by far and away the most satisfying part of the last 12 months the journey is achieving those things and achieving them in a manner that was better than what we thought success looked like at the outset. So yeah, it's and that's a testament to everyone in the organisation. You know, it's been a long road to hoe, and we certainly see adding new skills to the team as being one where we want to make sure they balance across the overall organisation.
Well said. Well said. Without giving too much away, next 12 months we've got ahead. Obviously, we're going to be opening up. Business is obviously going to be looking to be thriving as well. Is there anything in particular that you're most excited about? What are you looking forward to?
What am I looking forward to? Oh, look, we've got some cracking releases. So we think some real innovation in terms of the way that we're bringing together, I'll call it transactional software with payment and lending. So, you know, we've made some announcements around some of the functionality that we're building, and now that stuff's coming to life. So we've, you know, in the near term, we've got some really critical releases which will allow us to weaponize the Spenda ecosystem far more aggressively. And at the end of the day, you know, we talk about that a lot internally. So it's about getting the software doing the heavy lifting. So whether that's improving the way that we allow customers to apply for a service, or the way that we do credit scoring, or the way that we do approvals and then allow the customer to configure services, all those things where I suppose stepping back from and saying, is this the best we can do? And if it's not, what's the timeline to make it better? And that is, you know, the most horizontal cut through the business. Sorry, mate.
Okay,
I got some audio feedback.
No, that's fine. Yeah, just the last part, but that was all right. I think I got that. Now, big final question that we've got here, and look, a lot of people that are watching here today, especially some prospective investors, something I wanted to bring up is definitely the buy now, pay later, which isn't something that you guys are exactly tied to by any means, but in terms of a subsector is definitely something I think shareholders would be interested in that have invested in that sector. As we know that buy now, pay later, obviously you've probably seen as well, has gone a little bit out of favor this year. It's obviously had a huge amount of hype at the start of the year, but it had a massive shareholder following. And look, a lot of the people that are in those sectors are looking for greener pastures and alternatives. Do you feel CRO could be one of those alternatives moving forward?
Oh, look, for sure. I mean, at the end of the day, most of the buy now, pay later that's being done is between a retailer and a consumer. And that's not what we're about. As I said before, our software has the ability to blend each of the layers of the value chain. And we've tried to articulate that before. And I suppose what we've seen in the past, maybe 18 months with I guess the change in the way in which the media talks to the community is the word supply chain is now on the evening news. And it's usually on the evening news in the context of, you know, little Johnny can't get a bike for Christmas because there isn't any left. Now, the reality of it is that problem is pervasive through the entire supply chain. So for us, you know, we've really focused on how can we help businesses to understand their supply chain better, but have the capital available to them to make the right stock decisions when they need to be made, so that there isn't the scarcity of inventories. And I suppose we've seen that right the way through the journey. So if you look at, say, the acquisition of Green Shoots, we did that because we saw a gap in our product portfolio, but that product portfolio gap was also a product portfolio gap that everyone had. And now we've got sort of 40% plus of e-commerce transactions as a percentage of total sales. We can see what a significant impact that poor stock availability has on the overall sales experience. So for us, it's really about positioning ourselves as a lot more than buy now, pay later, a lot more than payments. We've got multiple financial tools in the kit bag. And one of the things that we've announced today is not a buy now, pay later service straight out of the gate for eBev. We're providing a financial product to them, which is allowing them to get early settlement discount out of their suppliers. So it's lowering their cost of funds, but it's also providing liquidity to the supply end. And that means that as an overall ecosystem, that part of the market and dealing with eBev should be much more effective for both buyer and seller. And that's what excites us, because then we can layer on other product. And that means that if a customer, as an example, wants to access a buy now, pay later service, well, they can do that and they can get 30 days of credit. But if we were blending that with, say, an EBEV style product, they might actually get 60 days of credit because the first 30 days is being paid for by the actual supply line. And if they wanted to go even further, they could add a card into the mix and maybe get 120 days of credit. So all this flexibility is not like any other peer in our space. It's all about understanding the patterns of behavior that allow suppliers to get cash in the account faster. And at the end of the day, they don't care if that's coming from us or from the customer directly. But equally, allowing businesses to get enough working capital into their business that they've got the opportunity to on-sell those to their customers. And if you can, as we call it, fund the gap and facilitate that gap being effectively managed, you've got a real recipe for growth. And it's not just growth in, New South Wales or Victoria or whatever, or Greater Australia. It's growth anywhere, because at the end of the day, buyers and sellers exist in all markets.
100%. Well said. I think for people watching as well, some good points to take note here. CRO has obviously positioned itself quite well over the last 12 months in the midst of COVID. Obviously expanded their base and really kicked some goals. So moving into the next 6 months that we're seeing, obviously we've got a big increase of spending, which we are expecting coming into the Christmas period. There is also a good alternative to the buy now, pay later sector, especially in this space, that people aren't really noticing. So yeah, we're obviously pretty excited for the next 12 months for you guys as well. And I'm sure there's going to be plenty more news flow that we're going to be seeing. So it's going to be good to keep our eyes peeled. But I'm going to be moving on to some shareholder questions that have been sent in. Firstly, talking about the debt warehouse. So how are you guys managing the risk of debt? Look, hypothetically, if the strategy or the actual, if the numbers that come through just aren't as good as what you're expecting, is there a strategy to a bit of a safeguard there, or how are you guys feeling about that?
I don't think that is an issue at all. I think that what shareholders need to understand is establishing a debt warehouse isn't something you just turn on. So at the start, you've got to create the structure. What is it going to look like? Where will it be incorporated? Who will be the shareholders? Who will be the funders? What's the portfolio of debt you're going to put into that structure? And then on top of that, how will you manage it? Both from a financial reporting perspective, accounting standards, income recognition. Then on top of that, how will you manage the debt facility? So everything from how you board a customer, do credit approval, allow them to configure their facility, remind them when there's payments due. All those sorts of things are all about systemization of that portfolio. And then on top of that, you then got to go and board the customers themselves. So there's a fair bit to do there, and it's not something you just run at. And it's certainly not something that we're just running at. But that said, we know it's not an impediment to this quarter, but in the new year, we've got to have those things in place. But there's not people biting their fingernails going, ooh, how will we get this done? It's more, we're going through a process. We've got a project team internally that cuts right across all layers of the business, from finance to credit and risk, underwriting, technology, marketing, sales. The whole business, if you like, or a wedge cutting through, the whole business is working on this specific thing. We've worked very closely with New Capital to make sure that we're ticking all the boxes that both global credit funds and international banks see as being, if you like, best practice or best of breed. And we've either doing or done those, and we would expect pre-Christmas to give some pretty clear direction on, how that debt warehouse is going to come on stream and what that looks like in terms of core revenue impact.
100%. No, we're definitely excited. There's going to be more news flow, more relationships you guys are building, and obviously a really busy period as well. So another question here, obviously you can't, I think you've mentioned that you can't talk about people in the pipeline or anything like that, but to be quite direct, why haven't we made direct contact with Woolworths, Coles, IGA and Aldi? This is a question from a shareholder, obviously.
Well, probably the easiest way to answer that is we're not going to talk to pilot projects or pipeline. What I will say is customers like JT's already make it publicly available that they trade with those businesses. Now, from our perspective, any one of those players is part of both the supply chain as well as the demand chain, and you know, any prospect that we might work with, you know, we've got to go through the appropriate process to make sure we've got a solution, we know how we're going to deliver it, and it's real, not just sort of speculation on the vibe of the thing. So I completely understand why shareholders are asking specific names of customers, but the reality of it is that our sales team's been really aggressive at working with specific targeted nodes that we believe we got the best solution for. And as I've said before, fashion, food and beverage, they're targets for us. And we've obviously made announcements that those are segments we're working in, as well as others like automotive. We can see that at the end of the day, we're selling a solution for how people sell, get paid, and manage their own credit risk. So it's very horizontal, and it's all about us being very selective in the way that we utilize our resources, because we can't do everything all at once. It's as simple as that.
Perfect. Perfect. Now, I know you can't comment too much on revenue growth in the next quarter for obvious reasons, but have you got any comments going into next year just about your targets for revenue or anything like that? Anything we should be aware of?
Well, look, I can't make a specific forecast, but the reality of it is we're tracking on a pathway that we expected to be tracking on. You know, there's been no, as we said, we've had 7 quarters of, I think, average growth in high 30s, top of my head. We would expect that we would continue to at least beat that. And I don't think that's an unreasonable expectation for shareholders to set. But going forwards, obviously, you know, as we bring these other capabilities on stream, as we launch and make, you know, new tech releases, those things will change, and we'll keep the market informed as they do change, to make sure everyone really understands what we see as being the important ingredients to assess our value, you know, as an independent investor.
Yeah, perfect. Now I've got another one of our final questions here from a shareholder. Obviously, with the announcement today, I would mention this as a bigger customer by every mean, but they're asking, when is CRO going to be engaging some bigger customers, i.e. global brands?
Oh, look, whilst I wouldn't say that, you know, eBev's Coke or Nike or something like that, that, you know, they are a significant customer for us. And like anything, you know, you've got to grow your capability. And the important thing to understand about enterprise customers is you have to be able to run at their speed. So they're pretty slow to make decisions. They definitely want to evaluate solutions, but once they make a decision to play, you have to be ready to move with great speed. So for us, focusing on that end of the market is a longer burn. It's not going to produce the revenue results that we want today, but it will in the future. So if we just look at the current quarter, the business that we're winning now is really about how we'll continue to grow revenue in the March quarter, because obviously with Christmas, we're all spending money, and in the same way that sales will dip in January and February relative to December, as a general rule of thumb, there's a lot of balance sheet catch up. So whether it's people in the general community needing to pay back their credit card debt, or businesses need to if you like, pay back their accounts payable ledger for their supply line, there's going to be a lot of movement backwards and forwards. So we know that our growth is really contingent around the business that we're writing now, and that phenomenon, like understanding the cycles, is probably really important. But the other thing that we're doing as a business is stepping back and saying, is this thing too Australian? How do we make it more international? How does it look? So we're considering other, if you like, cycles that aren't built around Christmas and Easter. You know, other, you know, whether it's Chinese New Year or Diwali or whatever, you just need to understand that the world isn't Australia. And we're certainly, you know, coming to terms with what those other cycles look like.
Yeah, exactly right. Well said. I've got a final question here. some milestones for the next 12 months. You guys have obviously kicked some goals in over the last year that we've had, and that's been great to see. Shareholders have been, obviously people have been talking about it. Is there any more sort of milestones throughout the year that we should keep our eyes on or keep our ears open for, to be fair?
Well, I suppose if you reflect on the RAS paper, they hit the nail on the head. The debt warehouse is really important to us continuing to accelerate growth. Because if we look at the way that we can layer revenue, obviously there's SaaS, great, and then there's payments, that's great, and then there's lending. But there's also lending to each side of the trading relationship, and then there's other sort of experimental areas. So there's no question the debt warehouse is very important. And as I said before, we're on track with the work that we're undertaking, and we'll make some announcements with some specific clarity on timing, not too far down the road. But so that's probably the key thing. And then I guess secondarily to that, looking at the way in which we weaponize our software, it's probably important to really look at what technology we're releasing and how that differentiates from others in the market. And we would hope that we will continue to explain to investors why the technology that we're developing is both global in application, but directly addressing specific business needs that exist between buyers and sellers, wherever they happen to be and in whatever market they happen to be in. So that's a really broad kind of thing, which is why we're narrowing it down to what industries can we work with where you've got, if you like, high velocity consumption. So food, beverage, it's pretty obvious. We all need to eat and drink. Pets are another one that's really interesting to us. Clothes, obviously we all wear clothes. They're all consumable in nature. They have, they're the kinds of things when we make home loan applications that are specifically itemized as, how much do you spend on this? So, we know that they really matter right through the whole value chain, and we'll continue to focus there because they give us a really great cut through into different kinds of industries, and then we'll start looking at where industries meet one another. So like if you look at the packaging industry, it's very horizontal, and it's one industry I know really well. My old man started a packaging business in our garage when I was a kid. So I understand that a packaging customer could be in any industry. At the end of the day, things go in boxes, sticky tape's required, there's shrink film, there's adhesives, there's all manner of things that go with packaging, and that's another good example of an industry that allows you to break down barriers between other industries. So, we'll keep doing more of the same, but there's always a methodology to why we're doing what we're doing. And at the end of the day, as I said, we've got finite resources, so we've got to select customers carefully and turn down customers when we think they're not going to give us, the best return relative to, other segments in the market.
Perfect. All right. And answered quite well. Now questions come through. I asked questions. Well, we did have a lot of questions come through. I think what we're going to do here is we're going to answer some of these questions post this webinar. I'm going to do another interview with Adrian questions for everyone attending today. If you've got any more questions, send that line there. We'll definitely get Adrian to address that. Secondly, Adrian, really appreciate you coming on today, having us here. Great last 12 months. We're excited. Some points that I would like people to take away from this. Obviously, right here, CRO has had a really good 12 months. Things are definitely happening here. Obviously, for the next quarter, we're going to be keeping in touch with all the updates, and we're looking forward to the news flow. And yeah, a lot of people are talking about it at the moment, so we're excited with that. But yeah, moving back to
thanks, Jacob.
Thanks again, Adrian, for this. Thanks everyone for attending. We look forward to hearing you soon, and thanks again for joining the webinar. Enjoy.
Fantastic. Thanks everyone. Cheers.
Cheers.